It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we talk your property news 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon on our Wednesday morning. Yes, the 28th day for August. And I mentioned a couple of days ago about how some of Australia's largest banks haven't waited for the RBA to cut your mortgage rates and have independently cut rates on selected products. And when I say selected products, the cuts that they have made were right across the board. Some banks focused on term deposits while others reduced home loan rates. And since August the 23rd, banks including the Commonwealth Bank, NAB, ANZ, they have all reduced their rates on term deposits. However, 15 banks have also increased rates on certain products. For mortgages, rate cuts were less widespread, unfortunately, with only 11 lenders reducing fixed rates and 5 adjusting variable rates, primarily for new customers. And we say it all the time, don't we? How often does a new customer get better treatment than existing clients? All the time is the answer to that. And with the Reserve Bank of Australia holding the cash rate steady at 4.35%, understanding how to choose the right lender is more crucial than ever, particularly when you're buying a new property or refinancing an existing one. And this morning we are catching up with not one expert, but we've got a couple of mortgage experts, Sarah and Rebecca from Loan Market in Geelong. There are so many different types of government schemes, something I want to talk to you about this morning. Where should somebody start if you don't know what you're eligible for when it comes to these schemes?
Yeah, it's a great question, Craig. I mean, you could go on Google, you could go and try and find information on there, but there are just so many. So we always say to people, reach out to your broker, have a chat with them about what possibly they could get access to. First home buyers, there's a first home guarantee that the government have. And there's quite a few different sort of types that are out there. So there's a first homeowner scheme, which is to buy a property established or do construction. There's a regional scheme. There's one for single parents. So they only need 2%. So 2% of the property value. So if the property value was $500, they're only needing basically $10,000 plus costs to get into that property. They've changed it recently, actually. It was always, it had to be a partner or a solo person. And the government's actually changed that recently. So if you want to buy with a friend or a mate or a sibling, the ability to do that now has increased. So that's also great. All states have different types of fees in relation to stamp duty and transfer fees. So it's generally state by state that those are decided. So it's a really good idea to get in contact with your broker so they'll be able to guide you through what you're actually capable of getting.
That's just one reason to get in touch with a mortgage broker, because that whole landscape is changing almost every 3, 4, 6, certainly every 12 months. There's something on the dial that is moving. And there's a little bit of a misconception around guarantors these days. Perhaps explain to those listeners what a guarantor is and the different types and what misconceptions are out there in the marketplace.
Yeah, absolutely. So if people aren't or can't get part of that first scheme spots that we were talking about, guarantors could be another option where we always talk about the children and the adults generally. That's the way it would work. But the children would use a parent, and it generally needs to be a parent, but a lot of banks are different. Some will take a sibling or an uncle or an auntie or a step parent. But basically with a guarantor, it's generally the children that are asking access to a parent's property. And we sort of describe it like they're grabbing a bedroom of the parent's home and holding on to that as security. So it's generally a limited amount. It's only limited to whatever the kids need to keep their property under 80%. So with that, the guarantors generally need to seek legal advice with most banks. Not all banks offer a guarantor loan though, so some specialise in it and are better than others. Really what happens is the kids' bank will grab a bedroom of the parents' property and hold that as security until the kids have enough equity in their home to actually release the parents' property. And I mean, through COVID, with the rise in property prices, we saw somebody being released from the guarantor obligation within about 4 or 5 months because the property had gone up so quickly. I think probably one of the misconceptions with guarantors is, you hear about probably from 30 years ago when it was parents may lose their homes or had lost their homes as going as a guarantor, but it's pretty detailed for somebody to go as a guarantor. And a lot of times, obviously, guarantors won't do it if they don't trust their kids to actually be able to pay down some debt or increase the value of the property as well with renovations.
Now, the mortgage application process, this is what we're going to talk about this morning, because it can be, as I mentioned, a bit of a nightmare for people going through this whole qualifying pre-approval stages and different steps. Some people don't really factor that into the whole equation application process, do they?
No, I would say sometimes potentially it hasn't been factored in, but also that when people are coming to us, there is time constraints and they already are under some other pressures as well. So kind of understanding that process is really important.
And do you find that people, when they find out the process, it's like a bit of a light bulb moment, a little bit of an illumination where they go, holy moly, this is more than what I sort of bargained for?
Yeah, and I think it's our job as mortgage brokers to have that education piece and make sure people really understand what the process is from the beginning so that they don't have to feel like that again and that they do feel prepared going into buying a property.
Every week, real estate transactions take place as the market shifts month by month. And every day, we keep you better informed and updated on the Real Estate Podcast.
And right now, as you know, we like to give plenty of these property tips, and somebody we caught up with not that long ago, Luke Dawson from Simple Property Group in southwestern suburbs in Perth there. And what have you got for us this morning?
Yeah, look, Craig, I think a really topical one at the moment is helping buyers out with some tips on being the most competitive they can be with their offer. So things like being organised with pre-approval where possible is a great start. Definitely communicating with the agent as far as what the vendor is chasing. Things like flexible settlement terms can be really helpful in making your offer stand out from other offers. And just being as organised as possible, seeing the property and being ready to act on the spot where possible, I think is the best thing you can do as a buyer in this hot WA market.
Decode the property market with insider knowledge and insights to better navigate your real estate journey on the Real Estate Podcast.
And it is a Real Estate Wednesday. We are talking to Sarah Thomson in Geelong, all things mortgages this morning. And when you decide to save up for a home deposit, there is an untold amount of things that you need to get in place. And a lot of first home buyers think that it's quite an easy process to work out how much money you can actually loan. That mortgage money that you are loaning is largely worked out through your borrowing power. So, Sarah, you can step through for our listeners, I'm sure, how somebody's borrowing power is calculated, because I think a lot of people just think that it's based on their income.
Yeah, correct. So it is income, but obviously things like liabilities that clients might have, things like that would be HECS or buy now, pay later, which a lot of people forget about, and that can impact how many dependents they have. Are they paying child support at the moment? What are their living expenses like as well? So somebody with really high living expenses, can then generally borrow less than if somebody that was earning the same income was spending a little bit less as well.
Now, we should talk about the gathering of documents and information that people need to get their heads around to prepare for a mortgage application, because the rules and the criteria are always changing. So in 2024, Rebecca, what do borrowers need for their mortgage application?
Yeah, sure. So looking at the four main things, I would say ID, so having 100 points of ID, income documents, whether that's pay slips or self-employed tax returns, bank statements, looking at a 3-month period of bank statements, and being able to show what your commitments or your liabilities are. And that kind of includes your expenses, but also things like credit cards, HEC statements, any personal loans, or any existing home loans.
Now, I always like to sort of, ask different brokers their experience when it comes to people just not being on the right side of the ledger, because we talk about this being finance fit and ready. You talk about the HECs, the car loans, the credit cards. Some people just simply do not sort of put their brain into gear and start sort of thinking about, hang on, all of this stuff on the wrong side of the ledger, I've really got to sort of pay attention to this because I'm wanting as much money from the bank as possible. Is that what you find?
Yeah, and I think it is really hard because people make decisions at a point in time in their life and potentially they're not forward thinking to how that will impact them later, especially, you take HECS as an example and you're thinking about going to uni and being educated, and that potentially doesn't flow through to how that's going to affect a loan process in 5 years perhaps. So I think understanding how that's going to impact you financially, back to that education piece, is really important. But there are quite a few different factors in that as well. So I think having some advice and some guidance around those things is very important.
And Rebecca, lenders, as I mentioned, assess mortgage applications differently these days because people need to keep pace of what they need to satisfy a lender. So perhaps just enlighten our listeners from the other side of the fence, and that is from the lender's side, the lenders and what factors are most important in their decision making.
Yes, so I would say, as you touched on, obviously lots of lenders, lots of different criteria, but there are some key main points that all lenders will look at, and that's kind of coming down to credit score or the health of your credit score, income stability or how you're going to show that that is something that you've got and is ongoing, obviously balancing that income with expenses or what are your ongoing liabilities and how are they factored in. And the other one would be deposit or security. What's your skin in the game as a consumer, and how are you going to show the bank that you're not a liability?
Hey, thanks for coming on to the Real Estate Breakfast and enjoy your Wednesday.
You too. Have a great day.
Oh, thank you very much for having me. Everyone have a great day.
Let's explore together the power of real estate. We keep you better informed and updated. Every week, we present so much real estate. Powerful, up-to-date news every morning from 6 a.m. Know your property with us.
Well, look, I look at property prices. I try to stick within the $500,000 to $750,000 mark. We look at emerging markets in areas like Melbourne and across the country. They are becoming a lot more challenging to find.
You said earlier that everybody is a bit of an expert. They can't help not be because of all the information. Anything that you would suggest to people when they're researching property on the portals and getting their information?
So when I look at what advice do I get and where do I get it from, you want to make sure the source is a good source. You've got to get the right data that also looks at not only historical data, but why it's going to predict to grow as well. And go to the right company that when they put their investors in an area, this is something that's very important. They invest there themselves as well.
We connect you to the best real estate information across Australia. The Real Estate Podcast.